Hey, this is Matt from InvestiQuant. Today is Friday, April 8, 2022. Yesterday, the markets were weak early on, but then rallied all afternoon into the close, and we had a higher close, but we still finished below last week's low. So we had strong action that did not even make it to last week's low. Let me go ahead and run a study that looks at that type of price pattern that took place yesterday. So I'm going to grab all four instruments. The setup's going to be based upon entering long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, we are trading higher in the overnight session. I'm going to go ahead and add gap direction, gap up to this study from our opening filters library. The next thing I'm going to do is go to the price patterns library, and I'm going to grab two pieces of information from here. I'm going to get them from the active today section. That's the quickest place to grab them. First, what I'm going to do is this very top option here, higher close. So yesterday closed higher than the day before, and then I'm also going to add that the close was below the prior week low. So if I go down just a few more options here, close below prior week low, I'm going to click on that. That has been added to the test. You can see it up here in the header section. The last thing I'm going to do is put us in a similar market environment. We closed below a 10, but above a 200-day simple moving average. And then I'm going to click view results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when the prior session has a higher close but closes below the prior week low. The following session opens higher than the prior close, and this is taking place in what would be more of a weak bull market environment, which is defined as below a 10 but above a 200-day simple moving average. Historically, 60 samples in the S&P, 59 in the NASDAQ, 54 in the Dow, 64 in the Russell. Very similar sample sizes there. If we look at the win rates, 57% in the S&P, so slightly favored there. Very similar in the NASDAQ as well, 58%. Stronger in the Dow and Russell, those coming in at 67 and 66% respectively there. So a little bit favored here on win rates for all four instruments, with the Dow and the Russell being a little bit better than the S&P and the NASDAQ. If we look at the average moves, average win larger than the average loss for the S&P. That is also the case here for the NASDAQ and the Dow. The Russell is very similar in size. So all four instruments have win rates that are favored, and three of the four have bigger moves to the upside on average compared to the moves to the downside on average. So a little bit more of a bullish pattern here, historically speaking. Hopefully you found that helpful. Good luck today. We will see you next time.